Next up, we have Turaco Gold, another company that I have the pleasure of covering. Justin Tremain is the managing director at Turaco. He's got a background in project finance and has been running gold companies for around the last 15 years or so. He was the founding and managing director of Renaissance Minerals before it was acquired by Emerald, with Morgan here beside me. And then he was also founder and managing director of Exor Minerals before that was acquired by Perseus. This is his fourth time presenting at Diggers and Dealers, and I think your second time for Turaco, I think, Justin. And a fun fact about Justin, and one for people following, is that every time he's overseen a company, it has ended up turning into an operating gold mine. So I think that's a pretty good omen for you, Justin. But please welcome Justin to the stage, everyone. Thank you.
Thanks, Paul, and good afternoon. Thanks for coming and listening to Turaco. As Paul mentioned, we presented Turaco for the first time last year, and I feel as though we've progressed. We were the last presentation on the last day last year, so it's good to be on a Monday afternoon. And that reflects really how our FEMA project has progressed over last year. Last year at this conference, we had no resource. We just had a promise of a maiden resource, which we delivered on shortly after the conference last year of 2.5 million ounces. And then we updated that within 8 months of that maiden resource, added another 1.1 million ounces to take it to 3.6 million ounces. And that resource, which only came out a few months ago, is already out of date, and we've promised to update that resource again before the end of the year, and you'll see more growth on that resource. So now that puts it in the map as one of the most significant undeveloped gold projects in West Africa, which is very significant when you look at the quality of the projects in West Africa and the amount of gold production that comes out of West Africa. West Africa produces twice the amount of gold that Australia does, to put it in perspective. So to have one of the most significant undeveloped gold projects in the region, it's something we're very proud of, but will continue to grow. Our share price has performed well relative to our peers in a very good gold market, obviously. A market capitalisation today around $400 million. Most importantly, we've been able to raise money from some very good, very large and successful institutional shareholders. So we won't be raising money again before we develop this project, which will be developed into a mine with over $80 million of funding. We have 4 rigs drilling. We're drilling about 10,000 metres a month, and we'll only accelerate that as we come out of the wet season. It's important that we don't need to raise money. All the management team are significant shareholders in the company, and so that's a big focus for us personally. So looking at our progress, we only acquired this FEMA project less than 18 months ago, and we've got it to 3.6 million ounces. That's been driven by a huge amount of drilling. As you can see there, our share price has tracked regular results, and what we've demonstrated here is that we have a gold camp at FEMA, not a single deposit. Our resource is made up of 4 deposits. The last 3 lots of drill results that we've put out are results on 3 additional deposits that are not in that 3.6 million ounces. Hence, we're very confident of growing this significantly. Last year, we only had 51% of the project. Today, we've increased that to 80%. So just quickly on Côte d'Ivoire, I don't think there could be anyone to question that in West Africa, Côte d'Ivoire is the standout country. A lot of growth is coming out of the gold production in West Africa, and that's been driven largely by Côte d'Ivoire. There's been significant discoveries made over the last few years, and there'll continue to be. A few years ago, there was only 3 or 4 gold mines operating. There's now 10 and another couple of under development. Côte d'Ivoire is the most developed country in West Africa. It is the most affluent in a relative sense. And whilst the gold industry is an important part of the economy, it's not the largest part. Agriculture is the largest part of the country, and that's why it has relative affluence around compared to other countries in West Africa. Looking at our project, I say to people, you couldn't ask for a better located project. Our FEMA project in red there is down the southern part of Côte d'Ivoire, as far away from any security hotspots as you can be in West Africa, around the north, and benefits from excellent infrastructure. We're only a 2-hour drive out of Abidjan, the biggest city in West Africa. There's a brand new road, the photo you can see there, Bitchmar's Road, that runs through the southern part of our project. Our biggest deposit's only 2 kilometres off that road. Our furthest deposit is less than 10 kilometres off that road, so very good access. And also importantly, come development, we have access to hydropower, very competitive priced power that will be running off at 12 to 13 cents a kilowatt hour. That's about a 25 kilometre power line and substation that we have to put in, and there's capacity for us to take power, which we've confirmed, and it's very reliable. So it really benefits from everything you could ask for as a gold project. But most importantly, it's about the geology. So in Ghana, we all know some of the world-class deposits in Ghana. There's two main belts in Ghana. One of those main belts is the Sefwi greenstone belt that you can see in green-brown there, and that extends across the boundary into the southeast corner of Côte d'Ivoire, and our EFEMA project, which we've now expanded to 1,600 square kilometres of contiguous ground, basically covers 80 to 90% of that world-class belt as it sits in Côte d'Ivoire. We have a number of different targets, if you like, from exploration. At the moment, our focus has been along the eastern margin of that Sefwi belt, which we refer to in Ghana as the Bibiani-Shirano Shear, and here in our project we refer to that as the EFEMA Shear, and that's where our deposits sit along that. But we also have another shear, the Asingara Shear, in the sedimentary basin in grey there, where we've started drilling, getting great results on. We've got 20 kilometres of strike of that. And then we've got the Sefwi greenstone belt itself, where we've started to drill and immediately having success there. So we have a number of different angles to grow this as a significant gold camp. Looking at our resource, as I said, 3.6 million ounces made up of 4 deposits. The Woulo Woulo deposit, a moderate grade deposit at a gram, but as I'll show you, very low strip ratio, as easy as it gets as a gold deposit in all respects, modelling, mining, metallurgy. And that's supplemented with these higher grade deposits along the EFEMA Shear, same with Jonction, which is only about 10 kilometres away from Woulo Woulo, at just over 2 grams per tonne, about 600,000 ounces, and so forth with Anuri, about 5 kilometres away from Woulo Woulo, 500,000 ounces at 1.7 grams per tonne, and then the Asupiri deposit of 800,000 ounces. I know you hear a lot that every deposit is open. These deposits are genuinely open, as I'll show you, and will continue to grow. But along this EFEMA Shear, historically, there was about 12 pits mined back in the 90s just for a shallow heap leach operation. And so far, Jonction and Anuri just represent 3 of those dozen pits. So we'll gradually step out, do more drilling, metallurgy, and bring more of these deposits into our resource over the next 6 months, 12 months, 18 months, and so forth. We've also done a huge amount of metallurgical test work, and we've demonstrated that we achieve 85 to 90% recoveries across all of those deposits to gold doré by treating on site. Also, that resource, about 60% of that is in the indicated category, and that's really the component that will optimise into reserves at a gold price of less than $2,000 an ounce. So we don't have a lot of infill drilling to do to convert this to a reserve, and we have commenced a feasibility study which will demonstrate that. But the very much focus is to continue to grow the resource. As I said, we'll have another resource out by the end of the year. All of our resource sits within a granted mining permit that you can see in red here, which is quite unique for a company at our stage. And there was a feasibility done about 10 years ago, and what that demonstrates is there's absolutely no impediments to developing a gold project here. No environmental issues, no classified forests or anything to develop a gold project here. Within that mining permit, you can see the EFEMA Shear there running down the eastern side of the Sefwi greenstone belt. We've got 25 kilometres of strike of that within the mining permit, and then obviously the extensions to the north and south within contiguous exploration permits. It's not one shear, it's a shear zone, about 2 to 3 kilometres of width. And when you add it up, we've probably got over 100 kilometres of prospective shear zones within that mining permit, and we've only drilled a very small percentage of that, and that's yielded about over 3.5 million ounces. As I said, we've put out results subsequent to that resource along that shear at areas called Adiopan, some results today, Begnapan, which was some results a couple of months ago, and Talesio, some results about a month ago. These are 3 additional deposits that we'll look to bring into our resource over the next 6 months or so. Looking at each of our deposits quickly, the Woulo Woulo deposit, as I said, moderate grade at about a gram, but a very simple deposit. We've drilled it over 3 kilometres of strikes. It's a very large deposit, very large system. We've drilled that down to about 200 metres vertical depth in the northern sort of 2 kilometres of it, to the right of screen there. The southern 1 kilometre of strike, we've only really drilled not much more than 100 metres, so there's still scope to expand that 1.6 million ounces. About 1 million ounces of that, or just under 900,000 ounces, sits in the indicated component, and that's what we'll optimise at a gold price of sort of $1,800, $1,900 an ounce. It's all been drilled with diamond on 30 to 40 metre spacing, And as I said at the start, these deposits are open. So you've got results like 66 metres at 1.5 grams, 50 odd metres at 1.3 grams. In the southern part, just very shallow, that haven't been followed up with any deeper drilling here. Very simple metallurgy here, so 90% plus recoveries in the oxide fresh and transitional at a 75 micron grind size. And most of that gold leaches within 4 hours with cyanide consumption of less than ½ kilo per tonne. It's very low, so that will drive low processing costs. As you can see here, the geometry of it, it's over that 3 kilometres. It's got one zone of mineralisation that pinches and swells from 20 to 80 metres, but averages 40 odd metres in true width, which will drive a very low strip ratio. And in terms of resource risk, every section is basically the same as what you see here, and you can see those intercepts there, typically 40, 50, up to 80 metres of mineralisation at 1 to 1.5 grams. Very good continuity. In terms of growing this resource, we're looking at parallel structures. So we've got onto another one just to the west that traverses across the exploration permit onto the mining permit, and we call this the Herman Trend. There's an ancient colonial era mine there, and we've been following that up and getting results such as 6 metres at 6 grams, 15 at 2, etc., etc. Not the same widths as Woulo Woulo, but higher grades, and you'll see some more results from there. And that Herman is emerging as another significant deposit and a significant increase to this 1.6 million ounces at Woulo Woulo. Just to the east, we did some reconnaissance drilling, actually looking at where we would potentially conceptually put a tailings dam, and we got results like 4 metres at 82 grams per tonne and so forth. So there's a lot of parallel targets around Woulo Woulo to continue to grow it. 10 kilometres to the north, the Jonction deposit is our high grade deposit, so just over 600,000 ounces of gold at 2 grams per tonne. You can see it's from surface. It's got quite a short strike length of only about 200 or 300 metres, just a high grade plunging chute. And what we expect to find is more of these chutes as we step out along strike to the south and to the north. And the drilling that we've put out over the last few months is demonstrating and vindicating that potential of more of these Jonction type chutes that we'll discover. Once again, we've done metallurgy on this and demonstrated that we can achieve recoveries of over 90% here. It does require fine grind, but on a very low mass recovery concentrate of around 3% of what we mine, we'll do a fine grind on and get plus 90% recoveries. Stepping along strike to the south back towards Woulo Woulo, 5 kilometres along the same controlling structure as Jonction essentially. We have no drilling for 5 kilometres. Then we come into the Inuri deposit, where we have drilling over 3 kilometres, but really only about 1.5 kilometres of that has been drilled down to about 200 metres, and that's how 500,000 ounces at 1.7 grams per tonne. This is genuinely open, like there's a hole in the middle there, sort of 67 metres at 8 grams per tonne that hasn't been followed up. So I think that classifies as being open. Once again, it's well drilled, so what optimises into open pits here is already drilled generally to an indicated category. And the same metallurgical performance as what we see at Jonction. Then our fourth deposit, Asupiri, which sits right next door on a parallel structure to Jonction. We've got 800,000 ounces of gold there, but it's only been drilled down to 100 metres. We put out some more results on this today to show that this is growing, particularly the western structure. We have 2 structures there. That western structure is completely open, and with some pretty good results out today of like 16 metres at 2.6, 22 metres at just under 2 grams per tonne. And that continues that mineralisation for about 3 kilometres to the north, with only drilling down to 40 or 50 metres. And then we come into the Agiopan deposit, where we had some results today of 25 metres at 2.7, 21 metres at 3.2. So all of this is just adding ounces to our 3.6 million ounces. And then as you move further north, this is the results of some IP, where we drilled further north of that Asupiri deposit along the same structure. We come into the Begnapan deposit, which is not in resource. So none of these results you see here at Begnapan, 34 metres at 3, 6 at 6, 10 at 16, etc., are sitting in our resource. This will come into our next resource update. We've got 2 kilometres of mineralisation there. And then along strike from Jonction, as I said, these high-grade plunging chutes, we have another one, Talesio, where we've got 25 metres at 1.8, 20 metres at just under 4 grams per tonne. Another deposit to bring into resource. And everything sits within a 10-kilometre radius. So it is a gold camp. At the moment, we've only tested one structure, which is the Ephema Shear, and that'll be several million ounces of gold, which will continue to grow. This is the results of soil geochemistry. Most of that sits in the south around Inuri, Asupiri and Woulo Woulo, the gold anomaly there. You can see the gold anomalies and continues along strike that's barely been touched with drilling, and we'll continue to step out along strike to the north there and test that soil geochemistry over the next 6 months. To give you some idea of some other targets, just sitting off the Efema Shear within the Cephweed belt, we have a big anomaly, 3 kilometres by 2 kilometres, called Baffia. Never seen any drilling. Sits over the top of an intrusion. We drilled that recently, just with half a dozen holes or so, and got 30 metres at 1.7, 21 metres at 1.8 of gold mineralisation in a granite. Something slightly different to what we have along the Efema Shear, and we'll be back here drilling on this in the next few weeks, and this could emerge as something, once again, another discovery for Turaco. And then this other shear to the south, the Nema Lesser Shear, as I said, we've only just started drilling this. We have about 80 metres of oxide here before we move into the fresh. We've got 20 kilometres of strike of very strong gold in soils. And you can see some reconnaissance drilling that we've done there, where we've been getting some pretty good results of 10, 20 metres at a couple of grams per tonne, which we'll continue to drill and add oxide ounces to our resource. So looking at where we sit now in relative to our peers, like there really is only about 3 or 4 other projects of this scale in West Africa undeveloped, and 2 of those are actually under construction. That's Predictive, Montage and Robex. They're all trading around $200, $300 an ounce. Whilst we've outperformed our peers in terms of share price, we've come from a low base, but we're still only valued at about $100 per ounce. And we have some advantages in terms of access to grid power and very well located in the premier jurisdiction of Côte d'Ivoire. So we've got a team that's done it before. There's no doubt this will be a mine, and a very significant one in West Africa. We'll continue to put out drill results. We'll have a PFS completed in sort of April. That'll move straight into DFS. We've commenced an ESIA. We'll look to have environmental approval by the end of 2026 and be looking to develop a mine here in early 2027. Thank you very much.
Thank you.